Yeah, I think we're recording now. Yeah, Ajay, you can start. You can give like a quick introduction if you want to, and then you can start with your presentation.
Yes. Yes. Thank you. So, hi, as mentioned, so my name is Ajay, right? So, yeah, I'm a chartered accountant by profession. So I also came across the concept of Bitcoin back in 2017, right? So that's how I also understand this. So back in 2017, when there was a boom, right? Yes, people started coming to me, understanding the taxation. So how I actually learned about this is majorly I'm also a fellow Bitcoin holder, right? So I also started investing. I did all sorts of trades, and then it was easy to connect the taxation and the sectoral understanding. Right? So today, majorly we'll be discussing about the taxation mainly from the investor, trader, and from the freelancer angle, right? Majorly people hold Bitcoin and they hold it for a much longer term, okay, and then they offload it, right? So what kind of tax impact do they have from the Indian perspective? So this is the agenda, right? So we'll be briefly discussing about the definition of what is a virtual digital asset. Section 115 BBH, right? This covers the crypto taxation here in India, and 194, yes, so essentially the 1% TDS concept, and whatever the necessary CBDT circular which they have released at a later point of time. And majorly we'll be discussing about investor, freelancer, and trader, and majorly what kind of compliance requirement needs to be done, right? What sort of record keeping, ITR filing, how does the AAS impacts, and certain high takeaways, and some of the FAQs which I normally hear from my clients. So now the income tax first defines about virtual digital asset, right? So the virtual digital asset is a umbrella definition, right? So it covers a wide variety of aspect, right? So they have a generic definition which says that, okay, any information, code, number, token generated through cryptographic means, right? So essentially it covers any sort of token, right? Whether it's a Bitcoin, Ethereum, all the NFTs, or any other crypto assets, right? Whether it's a fungible or non-fungible. So all of them get covered under the definition of virtual digital assets as per Section 247A of the Income Tax Act. So let me go through the Section 115B, which is legal extract, right? So what exactly do they define, right? So the here exact definition, what they say is income from transfer of VDA shall be taxed at 30%. Yes, as I understand, everyone will be familiar that yes, the VDA or Bitcoin, they are taxed at straight up 30%, right? But the main question most of them have is what sort of transactions are taxed at 30%, right? Because people usually have questions. I have sold tokens, I have done trading, I have done freelancing income, right? So now here, to be very specific, right, the section 115 BBH of 30%, right, it is applicable only when you transfer any income which is arising from transfer of virtual digital asset, right? So how do you define this transfer, right? So transfer is essentially you already hold certain say Bitcoin, right? And then any incremental gain that you make over and above selling of those tokens, right? Only that comes under section 115 BBH. So like say for example airdrop that you have, or any kind of derivative trades that you do, any kind of freelancing income, they are not covered under section 115 BBH. The special rate of 30%, as you see from the definition, right, it very clearly says income from transfer of VDAs. Okay, when you are transferring your crypto assets or Bitcoin to any other individual, right, any incremental gain that you make on top of that, right, only that is subjected to special rate of 30%. Now, what are the, yes, further to 115BH, right? It also says, see, there is no deduction in respect of any expenditure other than the direct cost of acquisition. So any kind of brokerage fees that you pay or any kind of gas fees that you pay, all of this cannot be included in the cost of acquisition. Or so essentially it will increase in the liability assets, right? So the loss treatment also, this also becomes very important. So the loss from the transfer of VDA, it cannot be set off against any other head of income, right? Not only that, say you have made a trade, say the first trade you have made a say you have sold some Bitcoin, and then you have made a profit of 1 lakh, right? So you have made another trade, okay, where you have suffered a loss of 1 lakh rupees, right? So in this case, if you take a conservative approach, right, what does the law says is you cannot set off this. And even though on the net basis you have suffered essentially you have made zero gain, right? Still you are supposed to pay 30% tax on the profitable trade, that is on the 1 lakh. So thereby a liability of 30,000 gets arised on this. Then carry forward of loss, right? Yes, of course. So the loss cannot be set off, nor such loss can be carry forwarded. So this is a very harsh treatment, right? To be very frank. So I've seen multiple clients where they've actually suffered losses, right? So they have a loss of say 10 lakhs, and then they have made a gain of only 5 lakhs, right? On the overall, they are actually suffering from a loss of 5 lakh, but still they are forced to pay a tax of 1.5 lakhs on the 5 lakh gain that they have made. Now, the next aspect of 115BS. So this here is one simple example that I have given, right, on a high level. Say, for example, you bought say in the year of 2021, you have made an initial purchase of Bitcoin, say worth of 2 lakh rupees from a, say, a exchange like GetBit, right? Now, what happens, right? When you initially buy any kind of Bitcoin or any sort of virtual digital assets, okay, so you do not have any kind of tax impact. You need not do anything from the taxation angle. There is no liability on the TDS aspect also, right? About the TDS, we will discuss in detail, right? But essentially, there is no TDS as per section 194. Yes, that you as an investor need to worry when you go through a exchange, right? When you buy crypto assets through a recognized Indian crypto exchange, then you need not worry about TDS also. Now say, okay, now you are holding that 2 lakh rupees worth of Bitcoin in the exchange wallet. Later, for security purpose, you might want to transfer it to, like, say, some ledger or some other private wallets, right? So when you move the assets from your exchange wallet to any private wallets, right? So there is no tax liability on this also. Say after, like, say, a couple of years, right? Then you bring in the third step, you essentially bring those crypto assets back to your exchange for liquidation. Now, again, when you transfer those assets from the ledger back to your exchange, here also there is no taxable event. Now, finally, you sell it for, say, 3.5 lakhs in the GetBit exchange itself, right? So even at this point of time also, you need not worry about any sort of TDS. The exchange will take care of the TDS, right? So exchange, what it does is 3.5 lakhs if you have sold, it will pay you only 99% of the realizable value, right? So it will essentially deduct what, 3,500 rupees, and whatever the charges, right? After that, it will credit the money back to your bank account. And so essentially in this, what happens is the capital gain will be whatever the incremental value, right? From 2 lakh to 3.5 lakh, that is around 1.5 lakhs. And then whatever the 30% is a special rate, right? Thus, what does the special rate means? Irrespective of your slab rate, whether you have zero income or 10 lakh income, right? Directly 30% will be applicable. Now again, so the 30% is not a straightforward number. Now say if your income exceeds certain threshold, like say 50 lakh or 1 crore, additional surcharge might also be applicable. So this 30% might go further higher. Just to give an example, if your income say goes above 50 lakhs, the effective rate will come around 34%. So this whole example, right, what I will give you a reference to is, like, say, think of these as a bank accounts, right? Now you have HDFC, ICICI bank account or SBI bank account, right? When you move the assets or when you move the money between or among your own bank accounts, there is no liability as such which arises. Okay, so you can take a similar inference for the Bitcoin also, right? So whenever you move the assets in your own wallets or in your own exchange, okay, so there will not be any kind of liability. Coming to the TDS aspect, right? Yes. So essentially 1% TDS, which everyone are aware, right? Here, main important point that you need to consider here is when this TDS is applicable, right? The TDS is applicable only when seller is a resident of India. So this is something which many people miss. Okay, only you as a buyer, if you are buying any crypto assets from an Indian resident, Indian tax resident, right, then only you are obliged to do 1% TDS. Okay, so then yes, there are certain threshold limit. Okay, but it's very basic, like say 50,000 per financial year. Okay, this is a threshold limit over above which you are supposed to do this 1% TDS. Now, what are the responsibility, right? So a buyer, whenever he acquires any kind of crypto assets, okay, he is supposed to deduct. He is supposed to take the PAN card of the seller and deduct 1% TDS and pay the balance 99% to the seller. So essentially, 1% TDS is not an additional liability on top of 30% that you pay on the gains, right? 1% is supposed to be a mechanism where income tax department can track those transactions. That is not supposed to create any additional liability on the buyer or the seller, right? So if I take an example of, say, you have bought 100 rupees worth of assets, you are supposed to pay to the seller only 99 rupees, and 1% is the amount which you have deducted from the sale consideration and which you are supposed to remit to the income tax department in the name of the PAN of the seller. So you use form 26QE, right? Using this form, you essentially make the TDS payment, and such TDS is applicable whether it's a crypto to crypto pair or crypto to fiat pair, right? Irrespective of the nature, you will have to do the TDS. Now, again, the TDS is not applicable in all the scenarios, right? So you as a buyer, see, first point is you need to worry about TDS only when you are a buyer, okay, not a seller. If you are a seller, you need not worry about doing any sort of TDS. It is the buyer's headache, right? Now, if you are in the shoes of a buyer, now here are certain things which you need to be worried about. Okay, now first point is, uh, if you are buying the crypto assets through a recognized Indian crypto exchange, then it is the exchange's responsibility to deduct the TDS. So you have no worries. Say if you buy a crypto assets from a platform like GetBit or any sort of other recognized exchanges, right? Then the responsibility of doing all of this TDS, right? It is the headache of the exchange. So exchanges compliance team, they will take care of it. You need not worry about the TDS at all. So now the question is, when will be the TDS headache will come into the buyer, right? So yes, so one more point is, what about the international and DeFi transaction? This is the major question which I get. So client come to me and ask me, okay, say I have bought it through international exchange. Okay, I have bought it through a decentralized, what you call decentralized exchange. Okay, in this case, am I liable to deduct any sort of TDS? So if you remember the previous slide which I have mentioned, you need to do the TDS only when the seller is an Indian resident, right? Now, to be very frank, there is no clarity given by the income tax department with respect to this. However, what inference that we can take is, since these crypto exchanges are not within the Indian jurisdiction, and the seller is not easily identifiable, and we can presume that these sellers are non-resident, right? Once you consider them as non-resident, section 194 doesn't come into picture. Thereby, TDS is not applicable. Again, this is a gray area. However, this is the stand what is taken in the industry as of now. Now, the same thing is applicable for international exchange, DeFi protocols, right? So similar sort of stand can be taken with respect to this. Another major point here is, when you go through these exchanges, you will never be able to procure the PAN card of the other party, right? Neither the exchange will have any PAN card, or they will allow you, since it is a book building process or in the DeFi protocol, some other mechanism, right? You will never be able to get the PAN card of the other party. Okay, so in the case, what stand one can take on is, see, these people are not covered under section 194. Is very clear that, okay, since it is applicable only for sellers who are Indian tax resident, right? So that is the reason we can take a stand that, okay, the TDS we will not do in the case of international. Even if you want to do, you cannot do this in the case of international and DeFi protocols, right? There is no mechanism itself to withhold the TDS and even make the remittance for this. Okay, but again, on a slightly higher, slightly to provide more clarity from my side, yes, the income tax department has not given any sort of clear-cut clarity with respect to this. Okay, but this is the stand what is taken in the industry. Now, so overall, who needs to worry about the TDS, right? Now, if you buy crypto from recognized crypto exchange, you need not worry about it. If you are going to buy from international or DeFi protocol, there also you need not worry about it. So when does this section 194S, as a buyer, as an individual buyer, okay, when you need to worry about it? Okay, this is mainly applicable in the case of P2P trades. Okay, where we have seen, say, whenever you do a P2P trade through a Binance, KuCoin, or any other sort of intermediary exchange, right? You know who the other party is. You know that other party who is sending you money directly to your bank account, that person is an Indian tax resident. That seller is a resident, right? So this is the highest compliance risk that we have seen. Okay, and I was, yes, if you go to the Binance platform, right, some of them do ask for PAN card, some of them don't, right? The now this is a very significant risk that we are seeing. Okay, there's a very significant chance for all those merchants or any buyer who is buying any significant worth of crypto assets using Binance or say KuCoin or any other P2P platforms, right? Tomorrow there is a significant risk that they might be liable to pay 20% TDS and not 1%, right? Because 1% is applicable only if you obtain the PAN number and do it on a compliant manner. So if you do not have the PAN number of the other party, the residual section says that you need to do TDS at 20%. Okay, so you might be in a very significant hook. Now, yes, this is a very common question which asked by my client, and many of them do this, right? All the merchants in the Binance P2P, right? It's a very common, and I recently heard like, okay, many merchants in the Binance P2P have received several income tax notices also with respect to this, right? That why you have not done the TDS, so and so. Okay, now this is a very significant compliance risk that everyone needs to be aware of whenever you buy crypto assets via P2P through exchange platforms. Okay, yeah, I mean, it can be either exchange or through one-to-one also, right? Not just exchange, where either any sort of P2P transaction. This is the only place you, as a buyer, when you are doing a P2P buy, only then you need to worry about the TDS. Okay. Otherwise, in all the other permutation and combination, you need not worry about any sort of compliances with respect to TDS. Okay, so we are investor, trader, and freelancer. So may I know if all of you can ping in the chat? Okay, how many of you are like trader or say investor or freelancer, or say if you are completely new to the segment, right? So can you please ping in the chat so that I also know? Okay, yes, investor, freelancer. Okay, newbie. So I got 3 response. There are 20 people. Investor. Okay, I see many of them. I think they are a long-term investor. Okay, one minor I see. Okay, great. Investor, new trader. Okay, so overall, I see majority of them are investor only, right? Some of them, I think a couple of them are in as a minor, and some of them are trader also. Okay, so coming to the investor aspect, yes, holder. As a holder, I think we can classify them as an investor. So investor is essentially, I think the initial slide, whatever I explained, the same thing gets applied, right? So long-term holding with occasional transaction, right? So again, section 115 BBH, that will be clearly applicable. There is no room for doubt. Directly 30% capital gain on any kind of incremental gain that you make, right? And um, so again, there are traders and again freelancers also, right? So traders are essentially, okay, they do use algo trading or high frequency trading, right? So you have to be very frank, if you're actually dealing with virtual digital or crypto spot trade, right? Then again, the same special rate of 30% only will be applicable. Even though they are classified as a business income, still the special rate of 30% will be applicable if you are into high like algo trading and you are actually doing those trading in the spot market. And then next we have freelancer. I will explain the further slide. Okay. So now what about the derivative trades, right? I think nobody asked us a derivative assets. Okay, so any of you deal in crypto derivatives? If any one of you, like, you can ping in the chat. Okay, I think I'll just briefly explain. So crypto derivative is slightly a different treatment will be done, right? Now, crypto derivative are essentially a contract where the underlying asset will be a virtual digital assets, right? So the section 115 BPH or special rate of 30% asset, it will not be applicable for crypto derivative instruments because the special rate of 30% is majorly applicable on the spot rates. Now, if you are into future or margin trades, the stand taken by the industry assets is so essentially there is no clarity by the department, but however the stand taken is it will be classified as a normal business income, and the appropriate income slab rates will be applied and not the special rate of 30%. And the losses can be set off against each other. Loss trades can be set off against your profitable trades, and the losses can be carried forward for 4 years also. And there is no requirement to do any sort of TDS also in the case of crypto derivative trades, because all the clarification right now which has been brought out, it's purely for the spot trades where you actually take the delivery of those or of those Bitcoin or crypto assets, right? You only for that the more clarity has been provided. For the residual part like crypto derivative freelancers, airdrops, as such no clarity has been provided. However, there are residual clauses which already takes care of this. So essentially crypto derivative are treated as a normal business income, and slab rates will be applied, and there is no requirement of TDS withholding. Now, next is the freelancing, right? Freelancing is so slightly tricky, right? Now, when you receive crypto as a payment for the services that you have rendered, right? Again, so this will be this can be considered as an income from business and profession. There are 5 heads of income under the Income Tax Act. So one of the head is income from business and profession. So whatever the fair value of the crypto assets which you receive on the date of rendering of the services, right? So that will be considered as your business income, and the initial receipt it will be recognized as your regular business income itself. And the subsequently when you sell those assets, right, then only on the incremental gain over and above the fair market value, only on that the 30% special rate will be applied. So whenever you're having freelancing income, you have to be very careful about the gross receipt that you're making also, because if your turnover exceeds 20 lakhs, right, then you have to be very careful. Okay, now there will be certain GST registration and compliance also might come into picture. Again, this is a bit of a headache, okay, because there is no clear way out of this whenever you have a freelancing income or income from overseas. Okay, and that too if your income exceeds 20 lakhs. Okay, up to 20 lakhs it's fine. Okay, but if it exceeds 20 lakhs, there is a bit of a very gray area or a bit of unresolvable situation. Okay, I'll not explain further because most of them here are investors, right? Now I've given one example, right? Say a freelancer receives 0.5 BTC, say worth of 20 lakhs for his design work, and then he need to pay, even though he has not liquidated those crypto assets, even though it is still sitting in his crypto wallet, right? So still it will be considered as an income, and whatever the fair value of the asset, that he needs to pay tax at the slab rate. Okay, now say after immediately or say maybe after a year, right? So let's say he sells it for 25 lakhs. Okay, then on the incremental gain, he needs to pay the special rate of 30%. Now say if he receives 20 lakhs and immediately if he offloads it, right, without any sort of price difference, then you need not pay any kind of special rate of 30% because the capital gain essentially will be zero, right? But 20 lakh rupees of business income is all what the person has. Next, books of accounts maintenance, right? Now, it's very important to maintain all the records for all of this. What do you mean by records, right? So if you have exchange transaction, ensure that you download all the trade histories, deposits and withdrawals that you have done, right? Because me personally, I think I had opened my exchange back in CoinX back in 2017 and couple of other exchange also, right? Now I've seen multiple clients who got the notice for those years and these exchanges has been completely shut down. Okay, there was no way to pull the information and they were in a very big a difficult place, right? Because the department is asking, give me the trade report, but the exchange is completely shut down, the URL is shut down. Okay, how do they even or download the data, right? Yes, if you have it in the private wallets, then yes, you could easily go to the block explorer and get the data, but the exchange trades, right, since essentially these are centralized exchanges, especially what I'm talking about. Now you need to download the trade history and keep it somewhere in your drive, right? So to ensure that tomorrow you are not in a very difficult situation, or you can't trace back all of this transaction, especially exchange trades, wallet address, and all your bank statement if there are several or high volume trades. Okay. Now you also need to again, so it depends upon the volume of the case. So if you have very high volume or huge network sitting in the crypto or Bitcoin, right? It's very essential that you use some of the tools which are in the market to maintain those books of accounts. Okay, so essentially, what are these books of accounts? What do you mean by? Similarly, how you have Tally, QuickBooks for normal businesses, right? There are tools which are designed to maintain books of accounts for crypto, right? Now, where you can seamlessly import your trade. Like a trade history from the exchange, and also like say in the screenshot which I have attached, like say Trust Wallet, right? So all the, you can just enter the public address of those blockchains, and it'll automatically pull the data from the blockchain. And then if it's a centralized exchange, you upload the trade history, it will automatically recognize the exchange you have done, deposits and withdrawals you have done. Like say if you have bought from some other exchange and transfer it to your Trust Wallet, right? In those cases, it is very important to maintain track of all of this transaction, because if you have any significant volume, right? Say significant, I mean, let's say if it's more than 5 or 10 lakhs worth of trades or assets that you hold, right? Ideally, it is recommended to maintain these books of accounts, so that even after 5-6 years also, if somebody comes by and back asks to you, right, you have a ready ledger which is available. Because tomorrow, if any kind of assessment or anything happens, right, if you just view the trade report, it will not be accepted by the department. What they will ask you, they'll ask you to view the proper books of accounts, right? Books of accounts is essentially a centralized place where you aggregate all the data, okay, and give out a proper report with respect to, okay, how much gains you have made, how much income you have generated, what is the year-end holdings, okay, such kind of data. Now, yes, required documentations are mainly trade reports, wallet addresses if you are holding it in the decentralized wallets, right? And then sale informations. Now, income proofs can be. So again, in these tools, right? Again, if you have a, these tools are majorly required if you have a huge volume, right? Like say if you have more than 50 or 100 trades in a year, then only majorly all of this bookkeeping and everything becomes very important. Say if you are just buying the, say if just you are buying the crypto assets, just keeping it in the wallet, and you are not touching that wallet, you are not doing any sort of trades, okay, then you need not worry too much on this. Okay. Now, yes, you need to ensure those records are downloaded and kept safe. But if you're just buying and not touching those wallets, and you are a complete long-term holder, then you need not very much worry about the documentation, because there will be very few trades and you can keep those documents offline. But if you have a very high volume trade, say more than 100, 200, multiple sort of transaction, staking, or say some sort of swaps in the DeFi, okay, or say the sort of derivative trades, okay, multiple transfers, deposits into multiple wallets, exchanges, okay, so then it is becomes very important to maintain this books of accounts where you aggregate all the records in a single place. Now coming to the, what do you report to the income tax, what do you report in the income tax return, right? Two things are there. One is schedule VDA, right? Any spot trades. Again, reporting in, first of all, the word income tax means, first of all, you must have an income, right? That becomes very important. When do you have an income, right? You have income majorly when you sell any crypto assets. When you sell any crypto assets, that is the point in time where the taxable event arises. Okay, when here, this is a very important point. Whenever you sell any crypto assets, that is the point in time where if you have booked any profit or loss. So now when I sell crypto assets, I meant not just selling of crypto asset for fiat, but any sort of sale, right? It can be crypto to crypto pair, or say trades which you have done in DeFi, the trades which you have done in the international exchanges. All of this, every time when you swap one crypto to another crypto, so that is essentially a taxable event. So again, so the books of accounts, what I've shown you, so in that tool you will able to properly aggregate all of this information on the appropriate mechanism. It will help you to compute every trade. It will be able to help you to compute what is the gains or loss on every swap or trades. Now, in the schedule VDA is where you declare it. Okay, what details you require, right? You essentially require acquisition cost, what is the transfer value or the sale value, or any kind of expenses which you have incurred. Then the TDS credit, right? If you have sold any crypto assets, then the buyer or the exchange would have done the TDS, right? Essentially, if you are a seller, you would have received only 99 rupees out of 100. 1% they would have deposited in the income tax department under your PAN number. Now, that is something which you can claim as a tax credit against your income tax liability. Right. So now this is how a scheduled VDA looks like. Uh, Now this is essentially a snapshot of the income tax return form, right? So essentially the scheduled VDA is reflected in ITR 2 or 3. So if you have sold any crypto assets, ITR 1 and 4 will not be applicable. You need to use ITR 2 or 3. Okay, in ITR 2 or 3, you have a scheduled VDA, right? Where you need to give acquisition date, transfer means essentially the date of sale, right? Under which head you are declaring, whether it's a capital gain or business income, cost of acquisitions, consideration received, basically the sale value. Right? Now, this needs to be reported on each trade by trade level. Okay, when you enter the data in this table, what happens is any sort of negative value in any line item, right, that will get nullified. Okay, because they do not allow the set off of losses against profitable trades. Lost trades cannot be set off, right? So you need to view every trade. Okay, and any trades which has negative value in the column number 7, it will get nullified and it will not be set off against the profitable trades. So this automatically happens. So in the income tax return form itself. Now, concept of AAS 26AS, right? Yes, whatever you being a seller, you have sold some crypto assets. The buyer or the exchange, they have done the TDS, right? Now, the entire sale value, it will get reflected in your annual information statement and in your 26AS. Why this is important is if any of you have done any trades, okay, before filing your income tax return after 30th of May, because right now AAS and 26S is not fully updated. Okay, after first week of June, you need to log in to your income tax portal, go to your annual information statement, okay, and see whether there is any entry for sale of virtual digital assets or not. Okay, I just sent you I attached one screenshot here. If you see, you will see something like this. Okay, receipt on transfer of virtual digital assets. Okay, so it will also show you this Nebulio technology. So they think this is some other exchange. Okay, so it will mention which exchange has deducted this and also on what sale value they have done the TDS. Okay, now once the data gets reflected in your AS, it is absolutely necessary to declare all the data in your schedule VDA. Right, in this schedule VDA, you are supposed to declare it. So now if you are not going to declare it, even if there is a couple of rupees of difference, right? You say the AAS shows you have sold 1 lakh rupees of worth of crypto, but in schedule VDA, you are just declaring 95,000. Okay, automatically defective notice will be issued. Right? It's a system automated. What it does is it will automatically cross-check the sale value as per the AAS, and it will cross-check what sale value have you declared in your income tax return. I was also very surprised. So previous year, there was one client of mine. I like where there was just 2 rupee difference. Actually, I thought it will not matter, and I submitted. So immediately, actually, defective notice came in. It was very surprising. Okay, and once the defective notice comes in, then again it's a headache of replying it back. And last year also many clients who approached me who tried to file on their own, right? So they face the similar issues. Okay, now this is something which you need to ensure to the teeth, right? You should not miss it. Ensure that you cross check what is the sale value in the AAS, and you ensure that entire sale value has been declared in the schedule VDA of the sale value column, right? You ensure you declare to the full extent. Now, another main question people has is, what about the holdings? Am I supposed to declare, I have bought Bitcoin, I have not done any sort of trades, right? I'm just holding it. Am I supposed to do anything with respect to, from the income tax compliance point of view, am I supposed to do anything? Okay, so there are 2 scenarios. Let me explain. So now, by default, income tax return form does not has any sort of schedule or place where you are supposed to declare your crypto asset holdings. If you are just holding the crypto assets, you have not sold any of them, okay, in any exchange wallets or any of them, if you're just holding it, you are not required to declare such holdings anywhere in the income tax return. Okay, because income tax return is a very restrictive form. Okay, it's not like you can just there is some editable field where you can just enter anything, right? It's a very restricted form, and in the entire schedule there is no place where you can declare your crypto asset holdings anywhere in the income tax return form, except two places. I will just highlight that. So one exception is foreign exchanges, right? If you are holding any crypto assets in any foreign exchange, any exchange which is located in a outside jurisdiction, outside of India jurisdiction, right? Then there is a residual field which is called as scheduled foreign asset. If you are holding any sort of foreign assets anywhere outside India, you are supposed to declare it in the schedule FA, right? That is one edge case you might fall in, only if you are holding crypto assets in a foreign centralized exchange. Okay. Now, what about the private wallets or ledger or any other private wallets, right? Now, again, there is no specific guideline with respect to whether you are supposed to declare any crypto holdings if you are held it in a private wallet. Okay, there is no specific clarity. But again, on the other side, even on the conservative side, even if we want to declare it in the income tax return form, in say in ITR2, there is no place to declare the crypto holdings. Okay, so again, there is one schedule called a schedule AL, right? Asset and liability. Okay, some people argue that okay, we should declare the crypto asset holdings in the schedule asset and liability, but I personally disagree. Okay, because schedule AL is also a very restrictive form. Okay, so that is designed only to declare immobile property, financial assets, cash and cash equivalent, art, vehicles, and loans and advances. So there is no other field in the schedule asset and liability where you can enter this holdings of the crypto assets. Okay, so essentially, if you are holding any crypto assets in your domestic exchange or in your private wallets, okay, then in the current situation, recently the ITR2 also has been published. So there is no place or location as such where you can declare your crypto holdings. So essentially, you need not. That is the answer. So you need not declare the crypto asset holdings if you have not done any sale, right? Then you need not worry about declaring your crypto holdings. Okay, then again, so crypto form lacks specific section for declaring crypto assets. So again, there is no dedicated section for disclosing your crypto asset inventory, which are domestically held or even if you hold it in your private wallet. So I think few questions, I'll just take it up and later we can go for Q&A. Okay, so is receiving crypto directly to your wallet is taxable, right? Now say you have a decentralized wallet, you have a private wallet. There is some token which comes to your bank account. Okay, so sorry, it comes to your wallet, right? What do you treat it as? See, what I would take inference is think of it like your bank account, right? These wallets, think of it as a bank account. What will happen? Somebody transfers the money into your bank account, right? You can classify it as what? Either it is some sort of gift from your relative, or it is some sort of payment which you have received from third party, maybe as a loan or income in nature, or it is a credit from your own bank account, right? So these are the only four high level scenario which you will get. Okay, it can be either a gift from someone else, or it's a loan or a gift, or it is an income. Okay, so the wallets is also something which we have to treat it in a similar fashion. Okay, wallets are essentially in comparison to the bank account, right? We need to, whenever there is a credit or incoming tokens into your wallet, you need to see whether under which group, under which head you can group it, whether it's a loan, gift, right? Then so essentially it comes as a what like say mining, airdrops, freelancing income, right? All of them are directly needs to be treated as an income at the end. Staking income, right? Yes, staking income also in the similar way, right? There is some token hitting into your wallet. Okay, that again needs to be treated as a other source income, right? Not the special rate of 30%. If you see the wording that I've seen is yes, treated as income when received. Additional 30% applies only when staked tokens are sold, right? When you are selling those tokens, any incremental value, only that will be taxable. Freelancing is something which we have covered, and whether depreciation can be claimed on the mining equipment, right? Now, any mining revenue that you get, right? Any kind of token that you get rewarded for mining. So what we can classify it as a normal business income, right? Because essentially the section 115 BBH is applicable only for spot trades where you are selling the crypto assets for an incremental value. So now specifically there is no clarity with respect to how the mining income needs to be treated. But however, what we can do is we can treat the mining as a normal business income, and any expenditure which are incurred inherent to generating that income, so you can claim it's an expense, including the depreciation on the mining equipment, power, electricity. Okay, so to be very frank, so these areas, there is no express clarification given by the income tax department with respect to this. However, these are the inferences that we can take and the practices which are followed in the industry as of now. Okay, I think that's it. I will conclude my session for timing. So I think I will open up the platform for questions.
Yeah, thank you, Ajay. I think we already have some questions. Balaji, you can do it.
Hi Ajay, thank you for your nice presentation. So I have one question, like how is one's own wallet defined legally? It's just 12 words. I can give that 12 words. I can have it to myself. I can give it to somebody else. So how is it treated legally?
See, there is no specific guidelines again for this. Okay, it's a very good question. Okay, now this is a major question that I also get, right? So now essentially a wallet is a random alphanumeric or number, right? So it's just a random number. How do you associate your identity against that wallet? Okay. See, as such, again, there is no clarity which has been given by the department with respect to this. What the cases in the assessment that I have dealt with is, see, there was a case where it dealt with, see, the scrutiny notice, a high end scrutiny notice, what they will ask is, they will essentially ask you to give an affidavit with respect to affidavit, essentially a sworn statement, right? Now, say they will ask you, okay, give me the list of all the public wallet addresses that you own, right? All the private wallet address that you own, you need to give the detail. I've seen the cases where the income tax department asks for these details, right? So at that point of time, yes, see that directly department also, it's very difficult for them to track. So at the end of the day, they will ask you to give a sworn statement with respect to this. Okay. So tomorrow, if they find that you are conflicting, right? So then it attracts a completely different. So then it, like if you are lying in the affidavit, so then though it is completely a different purview, right? So it comes under the CPC or say what, like complete under different law where you are lying in a statement, right? But essentially, just to answer a question, per se, there is no direct way to associate your identity with the wallet. But essentially, in real world assessment case, what they will do is they will ask you to sign an affidavit with respect to this. Like say, if you give only like say 3 wallets, okay, then they will tell you, they will ask you to give an affidavit saying that, okay, give a sworn statement that, okay, I only have 3 wallets. You need to give a sworn statement. Okay, then if they tomorrow see that you are contradicting that, then there will be have a much higher implication on this.
Thank you. One more question, like how do I let's say I have so let's say I have lost my keys, and earlier I have made an association or statement that I control these keys, and later I say that I lost those keys, or let's say it's been hacked or something. So have you come across any cases where such issues have been dealt with, or have you come across any such cases? So like, basically it's is what is the scope of a voting accident claim?
See, essentially, I'll tell you what the law says first. Okay. What the law says is, again, see, the loss cannot be set off, right? Now, say, for example, you have bought 10 lakh rupees of BTC, you are transferred to private wallet, the wallet got hacked, you are no longer in control of that. Okay. Essentially, in a normal scenario, you are supposed to, they are supposed to allow you to book a loss on that. They are supposed to allow you to book a loss of 10 lakh rupees on that. But in the current legal circumstances, they will not allow you to set the loss against any other head of income. So essentially, that is the conclusion. Like any loss which you make, yes, if you have lost the private key, it essentially means it's a loss, right? You lost the control over the asset. You are no longer in possession of those assets. Okay. Then ideally they are supposed to allow you to book a loss, but they will not. Okay. I mean, even you book the loss, it will not be set off against the other profitable gains.
Thank you. I have few more questions, and if anybody else wants to go, they can go, and I can wait.
Balaji, if you don't mind, can I ask my question from my side?
Yeah, please go ahead.
Yeah, thanks, Balaji. Hi, Ajay.
Yeah, thank you.
Ajay, yeah. So my query is like I have two questions. The very first question is that in case like for the derivative thing, so if we do derivative on international exchanges like now Binance is a part of FIU, so there should not be an issue, right?
No, see, for the taxation angle, you never had an issue, okay? Because see,
Okay.
verifying FIU and income tax are completely different, okay? Because
Okay.
FIU
Okay.
is money laundering, right? So income, so current session is about taxation, okay? But
Mm-hmm.
so that will not matter, okay? See, even on the URL blocked exchanges, right? If there are so many exchanges, just right, even you can still do the trades in that. Okay, but what they say, it is like people I've seen like what people use VPN and everything to do trades, right? But see, yeah, ideally it's not right to do that. Okay, because there is a reason why they have blocked it. Okay, and one is not supposed to do that. But if they do that, right? So still income tax will be liable, right?
Okay, okay. I mean, why I asked that particular because when I saw your slide related to derivative market, so that was I was just little bit curious. Okay, that they, irrespective of any Indian or international, there should not be an issue. But only thing we have to fulfill the criteria whenever when we earn, and we should declare as a business income, right? And we have to pay the tax. That's the
See,
only issue,
the crux
right?
of that is, see, the major headache for everyone is the losses will not be set off against profitable gains. That is a major
But
worry. Okay, so
But
that
like
is
losses will be it's only for spot trading, no? It is not related to
exactly. That is my
for
point.
derivative.
See,
Yeah.
major question which I get from my client is, can the losses be set off in the derivative trades or not? Okay, in the derivative trade, my answer is yes. The losses can be set off. Okay, so from
Yeah.
that perspective, you are free from worries as such.
Yeah, that's why because I just when I went through your slides, so what I understood is pretty clear that there is no issue with this.
Correct.
Whatever issue, ifs and buts
Are there currently they are clear.
are clearly only for spot trading.
True, correct. See, because this is a
Right.
tax planning also, right? So if there are any people who are doing high frequency trades, okay, and again they are suffering a loss and profit in both the segments, right? So then they can think from the taxation angle, they can think of switching it over to the derivative trades instead of spot trades. Okay, because derivative trades are more tax efficient. Okay, compared to spot trades, allow you to set off. Derivative trade, they will allow you to. Because see, these are becomes very important. Actually, last year I've seen a client who had, I will tell you, he had a loss of 50 lakhs, and again he had a profit of 40 lakh. On a net on basis, he had a loss of 10 lakhs. Now, I mean, so sorry, it was much higher. It was close to a crore actually, a crore of loss plus a 1.1 crore worth of profit or something, right? Okay, he was very worried. See, the profitable trades are 1.1 crore. All of this are spot trade. See, paying directly 30 lakhs, even though his net profits itself is, I mean, even though are negligible profits, okay, he from it is supposed to pay the 30 lakhs from his pocket, right? See, practically it is impossible. See, the law will say something like this, okay, but see, people should be more aware before they do the trades, okay, because tomorrow you should not be in the situation that, okay, you do all the trades and everything, then when you come to me, say when I say that, okay, you are supposed to pay tax, then at the end of the day, like you will start taking certain actions which are more risky or which are against the law, right? So at the end of the day, you will be forced to like take those actions, like maybe end up not declaring it or else declaring it incorrectly. Okay, all of them will have some sort of complications down the line.
Okay, yeah, got it. And my next question is that, like, I'm an investor. Like most of the assets I've bought previous pre-COVID only. Okay. So one query what I'm having here, like, I'm just keeping it in the exchange wallets. Okay. And I'm just putting it on stakes, but I'm not selling anything as of now. So in
Okay.
that case, like for the staking part, like it's an add-on income only, but how we have to deal in terms, like still I'm not selling it off anything. I might sell in the future in the next year. Then I think, okay, now, so in that scenario, how, like for that staking earned or that interest, whatever, in terms of like in local terminologies, like it's an interest. So how we should declare that part then?
See, what you do is you need to declare it's a other source income. Okay,
Okay,
that's what you
okay.
need to do.
In
Okay.
VDA itself, I had to declare as a other source of income,
Not
right?
not under VDA. There is a 5 heads of
Okay,
income tax act, right? So
okay.
see, scheduled VDA comes into picture on any incremental gain that you have made after
Okay, got it.
completion of the crypto assets. Okay.
Okay,
See,
okay.
again, there are different conflicting views with respect to this. Okay, but this is what is taken a stand after interpretation of the law. I think I shown you the Bayer Act also 115 is what it says. Okay, and
Mm-hmm,
what stand taken by the industry with respect to this, right?
mm-hmm,
Okay, I mean, because not only your staking income, but say freelancing income, airdrops, or say mining income. Okay, all of this will be treated in the similar fashion. Okay, now again, it depends. Where do you declare it? Do you declare it under business income or other source income? Okay, if it's a mining, you need to declare, because you can use it in like both actually, whether it's a business income or other source income. If the income is a very small quantity, you declare it under other source. If the income
mm-hmm.
is a significant part of your income, right? Like I say 70-80% of the income is generating from that, then you can declare it under the business income schedule.
So like I'll just help me to understand in terms of an example. Just take down example. Like I bought down XRP, which around about $100. Okay, just giving an example, or 10,000 rupees. Okay, I put it on a stake, and the quantity of those XRP when tokens were 100. Now at the end of 1 year, I got 110. So there is an increment of 10.
Correct.
Now, but currently, so when we declare the income of sources, now like in crypto, the values are fluctuating daily basis.
Correct.
So on what basis we will declare, like on the date which we are declaring on that day, the based on the value of the assets of that add-on 10 tokens?
On the date when these tokens hits to your wallet, what is the fair market value
Mm-hmm.
of this? What is the market value of these assets? See, because that's why I showed you the example of the
Okay.
bookkeeping. Right?
Mm-hmm.
Okay, yes, I understand it's very confusing. Okay, initially, to be very frank, before I started, it was very confusing to me. Okay, I thought,
Yeah.
how do I even track all of this, right? So,
Yes.
see, I'm
Yes. Yes.
saying that every swap, every trade, you need to start tracking, converting it to INR, and see, because nowadays tools are available in the market. It's very easy, not very difficult. You just import the transaction, depending upon it'll automatically identify the fair market value of those assets. Okay, all of this will be very seamless. Okay, it is not very difficult. See, if you want, I'll just show you one report which I have generated from this software. Okay, like I just want to show it to you so that you have some idea. Okay.
Yeah, that would be great.
Okay, this is how a report looks like. I basically entered all the data into this. Okay, once I entered all the data into this, so it'll give us it'll give me a summary. Okay, this is the capital gain, right? So essentially, these are spot trades. Okay, what the total sale value, acquisition cost, how much were profitable trades, how much were lost trades. Other gains are essentially your derivative trades. Okay, how much of the derivative trades are profitable trade, how much of them are lost trades. Okay, then what about your other income? In this case, everything is zero. But how much were the airdrop, mining? So whenever you import the transaction into the tool, right, you need to mark it. Okay, what is the nature of this incoming tokens into your wallet? Right? So it's very seamless. Okay, you basically tag it. Okay, what sort of it is, a salary, other income, airdrops, mining. You basically just tag it. Okay, then what happens is it will automatically start recognizing it. Okay, now what it will do is it will generate you all the capital gain reports, right? Then it will also generate you, like say, any sort of income if you have. Okay, in this case, there is no income, But if there is any transaction which you are marked as an income, like say mining, airdrop, right, it will automatically recognize what date of the receipt, what in terms of INR, what is the value. It will automatically convert and then it will show the results.
Okay, okay. Now, just like a little bit, like in case, like if we do conversion from SN USDT to INR or from normal cryptocurrency, because normal pair, like in Indian exchanges, it is available in INR, normal tokens, but in otherwise in international exchanges, like it's mostly in USDT. So in that case, like when we sell out, so I think I'll just come to a point like while selling, there is no issue for me with respect to TDS, right? It's only at the time of buying.
Correct. That too, yes, exactly. With that too, buying when under the P2P only. If you are
Okay,
doing
under P2P. If you buy it on the exchange, then there is no headache.
no headache. Correct.
Yeah. Manoj, sorry.
Yeah,
Ajay,
done.
so sorry to interrupt.
Yeah,
Just
Ajay.
keep the short. I think there are like few people waiting for questions. Even I
Yeah.
have some, and I think we're
Yeah,
running
sure,
out.
sure. Please carry on. Mine is done.
Yeah, okay.
Yeah,
Thanks.
Ayush,
Thanks,
can I
Ajay.
start?
Yeah, please.
Yeah. Hi, Ajay. It was a very good, useful session. Thanks for doing this. So my query is like I have a friend who is working in Singapore. He used to send some money every month to his family who is in Chennai here. So before that, he used to send through the bank account only, regular transaction. But now what he found is there is some arbitrage difference between the Bitcoin price in Singapore and Bitcoin price in India. So like at least for the past 1 year, what he's doing is he's buying Bitcoin in Singapore and then sending the Bitcoin to his friends here who are like willing to buy Bitcoin and get the money from his friends to his bank account.
Yes, I got the question. I'll
Okay,
answer.
so now like this he is doing for a volume of at least like around 1 lakh per month. So like how do he like disclose this? Like how the income tax plays in this scenario?
See, if he sells through a Indian recognized exchange, then by default the TDS would have been done on that, right? So once it gets reflected in the AS as I shown in the above example, then automatically you need to show it in the scheduled VDA. There is no excuse. Okay. Once you show it in the scheduled VDA, the question is, okay, now say if you take an example of 1 lakh rupees, right? See, essentially you told me there is an arbitrage position, right? Of course, in Indian market, all the cryptos are trading at a premium, right? Comparatively. So usually what we see 5, 7, 6, 7%, 8%, 10% depends. Okay, there will be a premium on that. Now, in this case, how he can declare the assets is say, he has actually, first of all, you convert to Indian fiat, Indian INR value when he actually buys there, right? Say he would have bought it like say 1 lakh rupees Indian fiat, and now here he's selling it for 1.1 lakhs Indian fiat, right? Then essentially the incremental value that you see, right, that 10,000, that will come to the last column of column number 7. Okay, and then tax will be computed, right, automatically. Yeah. Okay. So, okay, whatever the arbitrage differences that he need to like declare. See, what I would recommend you is, because again, see, these are all to be verified. It's my opinion. Okay, but and again, it is logical also. Okay, it's not 100%. Okay, but see, what happens is, what I would recommend you is, see, small values, these are fine. Small values, see, 10, 12, 15 lakhs. Okay, but doing a high volume trades, right, more than 30 or 40 lakhs, it will attract unnecessary attention from the departments. Okay. Even though what you are doing is legitimate, okay, they might come back and you might down the side, you might need to spend a lot of time to answer their questions, because whenever the word of crypto comes into picture, right, they look it in a much more cautious manner. Okay, so they look it under what like very micro lens as such. Okay. So if it is, I think, as I said, if it's just 1 lakh rupees, it's fine. But there are many traders who are doing it at a much higher frequency. They are doing it in crores, right? Okay. It is fine, but you must be aware that, okay, I should expect something down the line. Okay. And you should be prepared for that. If you're ready to
even for 1 lakh or any higher volume, if he's like declaring the arbitrage amount and paying like 30% out of it, it won't be a problem, right? I'm just asking. That's what I said. So small value it is fine, maybe 10, 15 lakhs. Okay. Higher is also fine. Okay. But when you do that high volume, right? Like say 40, 50 lakhs, if you try to bring in, okay,
there might be an intimation from the department saying that, I see you have sold worth of crypto, 50 lakh crypto worth of crypto assets. From where are you getting it? You might need to provide explanation for that.
Okay.
I'm just saying, see, on a conservative basis, you must be ready to provide that explanation from the day one itself.
Okay. Got it. But by doing this, we are not breaking any rules. Like we just need to. Okay, got it. Just one more question. Like this is a complicated scenario where like my friend bought some huge amount of Bitcoin in 2017-18. Like that time, like 5 lakh, 10 lakh he invested, and then he had another friend who is like trader who like do small trading and take profit out of it. But then what they did is these guys shared the seed phrase and all the wallet details with his friend. So like one guy is like the person who invests the capital, and other guy is the trader who makes the Bitcoin grow. But then what happened is like at one point the trader guy told him like the wallet got hacked. We don't know whether he is genuinely saying it or he took all the money, but then the Bitcoin is not there.
See, sorry to break in the middle, but this question seems a bit complex. Okay, I think we can take it separately because multiple variables are there in this.
Yeah. Okay.
It might take much more time for me to understand and then give answer to this.
Got it. Yeah, happy to connect with you separately and discuss this. Thank you.
Okay.
Yeah. I think Parsh, you can unmute yourself and ask your question.
Thanks, Ayush. Hey, Ajay, thanks for the presentation. I just want a very quick clarification. So let's say I'm working as a freelancer, a software developer. I'm getting my payment in Bitcoin. And whenever I'm getting my payments, let's say at the end of the month, I'm almost immediately selling them on a registered Indian exchange, let's say Wazirex, at the fair market value. So my ATS is obviously going to capture it eventually because of the 1% reduction that is happening. So I should be declaring it under the VDA section and paying the tax in accordance with whatever the slab I fall into based on the salary or the amount.
See, there are two places where you need to declare. Okay. The first one is at the time when you receive those tokens into your wallet. Okay. So that one needs to be classified as a normal business income, and tax you need to pay at the applicable slab rate. See, just I'll give you an example. Say 100 rupees worth of token you have got. Okay. Directly into your wallet, and the fair market value of the token that you have got is 100 rupees.
Right.
Okay. What do? You directly declare it under the head of PGBP, or profit and gain from business and profession. Okay. So automatically when you enter in the PGBP, the normal slab rate for it will get applied on that. Okay. You can also go for presumptive taxation also, 44 EDA rate, if you're aware. Okay. You can go for that also, where you can claim 50% reduction on that. Okay. Now the next tranche of declaration is, since the data is already reflected in the AAS, okay, TDS is also done that. So you will need to declare it under schedule VDA, whatever the case might be, right? Because if you don't declare it in the schedule VDA, as I mentioned, automatically defective notice will be issued. So in the schedule VDA, what do you do? What you essentially do is, like say, you sell it for 110 rupees. Okay.
Right.
Okay. Now you show the cost against that as 100 rupees, which are already declared under the business income schedule. Okay. Now say if both are same, right? Say income which you are recognized is 100 rupees, and the actual fiat which you are getting is also 100 rupees. But normally that is not the case, right? Because there will be some sort of small premium or something which you will get. Okay. Because considering Indian market rates at a premium, right? You'll get a small 5-6% premium, right? So that one you essentially show it under the 30% category under schedule VDA. You show only that incremental value on top of the market value that you initially recognized.
Okay, got
it. Here, see, the major worry is, what if your income exceeds 20 lakhs, right? That is a major worry. Okay. To be very frank, even I also do not have a very straightforward. I have got many queries with respect to this. Okay, I try to do all sort of research and anything on that, but per se that there is no solution for this. If you are a freelancer, if your turnover is greater than 20 lakhs, right, you will be in a very big hoop as such. Okay, there is no clear path as such with respect, because whenever your income exceeds 20 lakhs, you're supposed to take GST number. Okay, once you take GST number, you are supposed to collect GST from the customer. The zero rated GST will not be applicable even if you are rendering service overseas, because you are not realizing the money in terms of convertible foreign exchange. Okay, there are certain practical problems which will happen if your income exceed 20 lakhs as a freelancer.
All right. Actually, I asked it because I was anyway under the 20 lakh slab, but because I did not declare it under VDA, I ended up getting this notice that, you know, even though I paid the tax corresponding to whatever the amount I received, but because it was not declared in the VDA and it was there in EIS, I got the discrepancy.
So let me repeat a sentence once more to everyone. Go to your EAS. Now it will not be reflected in your EAS or 26 years, because all the filing will happen. Last date is 30th of May. It will take a week for the data to get populated in the EAS, maybe second week of June, right? That is before that, don't file your income tax return also, okay? Until and unless all the data gets reflected. The data will get reflected only after first week of June. After first week of June, log into income tax portal, see how much income from is being reflected from virtual digital asset. Double check, triple check, and ensure that the entire sale value has been declared in the scheduled VDA. Okay, this is very important.
Sure. Thank you.
Okay. I think Dinesh has a question. Dinesh.
Hey, thank you. So I have a quick question. Say, for example, there are four person, A, B, C, and D. A is getting some kind of crypto from one wallet, and he is filing the tax and everything, and he is transferring the particular crypto to B, and B is not doing anything, and B is transferring to C. C is also not doing anything, and C is transferring to D, and D is selling it, and he's getting the TDS and everything. It's being done in exchange or what are the cases. And the A and D has done the filings of the income tax. What about the B and C?
So they are non-compliant.
Sorry, what was it?
No, they are non-compliant. They are supposed to declare, but they have not declared.
But they're not getting any of the profit, right? It's just a transfer of from one wallet to another wallet.
Okay, like that you are saying. See, if they are selling it immediately, like say, for example, 100 rupees worth of token.
Yeah.
He has received it immediately. He has transferred to C. Right?
Correct.
So then essentially, there is no gain, right? 100 rupees is sale value, 100 rupees cost, then 0 is gain. If 0 is gain, then you need not worry, right? Or no tax implication comes up.
Oh, okay.
And again from like C to D, right? C, or say for example, C bought it at 100 rupees, sold it at 100 rupees. There is no gain. See, again, income tax means first of all there should be an income, right? So income essentially in the form of increment in the value of the asset, right? So if there is no increment in the value of asset, if not getting in some additional income per se, then no need to worry about the tax also.
Oh, okay, understood.
He might be liable to declare. He might be liable to declare the same as income tax. Okay.
Okay.
Now, if he doesn't declare it tomorrow, if he gets caught, if he gets under the radar, if he gets called for information, still because I have had so many assessment cases, right? Even if you are not being able to declare the initial income tax return, if you have the records, you can go and prove that. See, I have bought it at 100 rupees, sold it at 100 rupees. There is no income for me. That is the reason I have not declared it. You can give an explanation as long as you have suitable evidence to support the statement that you say will not be the trouble.
Oh, okay.
And then the primary responsibility definitely is it's better to declare it in income. That is a primary one. Okay, but I'm just saying, case if there is an excuse where you missed out to get a legitimate way, right now you do not have that. Think that you need not worry as long as you're supporting document to all of this. Even if you are getting flagged by the department, and if we can provide proper response, as long as we are able to make them understand that there is no additional income, you need not worry on this.
Okay, understood. Thank you.
I think Varun, you can go.
Sure. Hey Ajay, thank you very much for conducting this session. Really very useful. I have 2-3 questions. So I'll try to keep it fast, and you can answer as you want. So one is, I think I gave an incorrect, income statement last year, because what I did was 2-3 months back, what I bought, the same, I considered that as the cost, and then I sold it immediately after 2-3 months. So I considered that as a sale value, right? But I have been buying for last 3 years, so I think that was an incorrect assessment of the cost and sale, right? So, but now that has gone in my last year's filing. So now, if I have to revise last year's filing, can I just revise it because there's a window of 2 years to revise last year's filing, right?
Correct. No, they are extended to 4 years.
Okay.
But
Okay. But I can still do
we need
that.
to take a look into the case specifically. See, because here majorly what we need to identify is whether there is any income which got escaped out of assessment or not.
Okay.
Okay, if you are going to revise the calculation, does it change the taxable income which you are declared in the previous year?
Yeah, obviously. Those things apply. I know that, but at least I can revise and the CA
Yes.
can take care of all those aspects, right?
You can file ITRU, right?
Yeah.
Related rate, sorry, ITRU updated return. Okay,
Yeah.
139.80 section, right? But see that you need to understand that okay, the inherent penalty also comes into picture, right? If it is
Right.
between 1 year, like 12 to 24 months, then 25% penalty plus interest will be liable. Okay.
Okay.
Now, yes, that's the case. So see, if you see it's a very high risk case as such, right? Then it is better to revise it.
Okay, got your point. Second thing is, if my CA is not very knowledgeable with respect to crypto, and suppose if I need to guide him that on a cost basis, if he needs to elect like LIFO or FIFO, an average cost basis system, is there any guidance for this?
See, that's what I said. The books of accounts, right? I'm repeating it for everyone. Okay. Everyone will have the same problem. Okay.
Right.
Even if you have done 30, 40 transactions, also I've seen cases. Even for me also, right? I cannot do it in Excel. Okay, I mean, see, I can do it, but see, it's too much time consuming.
Yeah.
Okay, and then next year it will be again a problem. Okay, next year I will not know what I have done in the previous year.
Right.
Okay, that's why it's very important to use some sort of bookkeeping software. There are many softwares in the market, like say Coinly, CoinX, like hundreds of other tools, right? See whatever is feasible for you. Okay.
Okay.
Even if you have your own CA, right? What I would recommend you is maintain the books. Okay.
Good.
Whatever the report which comes out of the books, you can give that report to him. I think I've previously for another like when I was answering the query, right? I showed the report. Right?
Yeah.
So what you can do is, if you can generate that report, give it to him, right? Then the CA, even though he doesn't have any crypto background, he will be easily able to understand.
Got it.
See,
Got your point.
At the end of the day, what does CA want? He wants input value for the ITR form.
Yeah.
Okay, as long as you are able to give that, then he will do his work. You need not explain him everything A, B, C, D of the crypto market, right?
Got it.
Okay, but now if you maintain those books of account, you have dual benefit. One is portfolio tracking. Okay, you'll be able to, if your assets are there in the multiple platforms, you'll be able to track your portfolio in a single place. That is one benefit. Second is automatically all this taxation, record keeping also comes into picture, right? Like portfolio management, record keeping, bookkeeping, plus calculation, filing. Okay, I mean not the filing, but the tax calculation and tax report, right? Till there, it will be a full-fledged solution.
Got it. And another question I have is linked to this. So I recently tried using CoinX, but I think what it's doing is suppose I transfer my crypto to my private wallet. It is not considering that as in my cost basis calculation. It is only considering the crypto which is presently on the exchange. Now that obviously is incorrect, right?
Sorry, come again. So you have some crypto assets and which you are transferred to private wallet.
Yeah. So as I told you, I have been buying crypto for 3 years now, right? But suppose I bought something in December 24 and I am selling that same thing in March 25, right? So I'm seeing that even CoinX is doing the same thing. Because my crypto holdings are not on the exchange, it is not considering that those crypto holdings in the cost calculation. And it is
because you need to include your that wallet also in the because you need to import the transaction data of the wallet also. I think in the slide which I shown you previously, right? I think I showed an example. See, you need to add all your centralized exchange or all your private wallets. You need to aggregate everything and you need to review the transaction. Whether the system has accuracy rate of 70-80%, not 100%. Okay, let me repeat. The system has only 70 to 80%. At the end of the day, it is our responsibility to review whether the system has done it properly or not. Okay, you need to take your eyes through once, because I've seen many clients who comes with the report, they'll close their eyes and then just give it to me. Okay, they will not even cross check it. Okay, they will think that okay, everything system will do. I need not do anything. That's a very false impression. The tools are there only to enable us, and that is not the final solution per se, right? like similar to the GPT solution, whatever. You can't blindly accept whatever the GPT says also at the end of the day.
Yeah.
You need to do your own due diligence.
Yeah. So largely I got your point, but then again with crypto wallets also we do so many transactions and there are it's difficult to keep a track. So maybe what I'll need to do is maybe I'll connect to their backend team and then find out what is the best.
That's what even I also do. See, the major portfolio that I also have is I usually handle slightly high net worth client accounts actually, especially for the crypto. Okay, because see the usually small stakeholder, they will tend to do it on their own also, or else they will only give you the report. But for slightly higher complexity, they usually come to me. Okay, where since I have both the knowledge of accounting, taxation, plus the crypto sectorial knowledge I have, right? I usually assist them in this also.
Right. Got you.
What I'd recommend is try to do it once on your own. See if it comes proper or not. See, I use a tool called as like Coinly. Okay, again, I'm not promoting anything as such. Okay, I'm just telling you what tool I am using. I found it, me as an accountant, for me, I found it very useful. Okay, maybe if maybe other tool, if it is working for you, you can continue that also. Okay, so yeah, I see. Try to do it once on your own. See, if it doesn't work or if you don't get any other solution, you want a proper bookkeeping, your portfolio value is very high, you want it done proper. If nothing goes, please contact me. I think I will drop my email ID. Okay, you can.
Definitely, got your point. So sorry for taking so much time, but I have one last question. I was trying to advise some businesses to have some crypto investments. And they contacted their CA, and then the CA told them that please be very careful. If you do any kind of crypto transactions, you will definitely get a tax notice. And then they got scared and they said, okay, we don't want to do crypto transactions. So, like, do you have any experience in these aspects? Like, businesses, even if they do everything genuinely, even if they file everything genuinely, even then they get tax notices?
Sorry, you said you are making payment in the form of crypto.
No. Right? I'm advising someone.
Okay.
To do crypto investments.
Okay, fine.
Businesses, basically.
Understood.
And they are scared because their CA tells them that do not do any kind of crypto investments because you will get tax notices, whatever you do.
Yes, and I'm sure I have the right. You are advising some other client with respect to crypto trading, essentially, right? You are advising them to buying and selling, right?
Yeah, trading or investment, however you want.
Okay, fine. You are advising them to buying, selling, and their CA is saying that no. See, it depends upon what approach you take, right? As I said, whenever the word crypto is there, usually department as such, they look it more cautiously. Again, it doesn't mean it's illegal, right? Nowhere it is mentioned that it's illegal. You can do it. It is just that because there are so many bad characters around the crypto segment, right? Okay, all sort of money laundering, this and all sort of illegal activities happens around this sector. Okay, the department is more cautious about it. Okay, as long as you maintain proper records, documentation about what you are doing, you need not worry. See, we have handled so many assessment and scrutiny cases also with respect to this. Say if it's a very clear-cut case, say you are buying some crypto, storing it in some private wallet. Okay, after some time you are offloading it. Okay, making some gain, you pay the tax, and you show a clear record of from the source of a purchase till the source where you have sold it. Okay, when it's a clear documentations, wallet address, proof of trade, proof of trade in blockchain or exchange, then you need not worry, right?
Got your point, but
the CA is taking more conservative approach. You can tell them that, see, you need not worry. Okay, as
you told that if there are high amount transactions, then you should be ready from day one with proper explanations of what is the source of the fund and all that. Right?
Bookkeeping, I said that is the step one to do this.
Yeah.
Do the bookkeeping, keep the underlying records, public address, trade reports from the exchange in the documentation. You file whatever the tax report which you get out of this bookkeeping tool properly in income tax return form, pay the tax. You are free from worries. Tomorrow, any kind of query comes up, right? You have all the documentation ready in hand. Okay.
Got your point. Thank you so much.
Okay, we'll take one last question, Ajay. I think Divakar Balasubramanian is here.
Hi Ajay, hi Ashos. Thank you for the wonderful session. Actually, I'm hoping for investing in Bitcoin, and I'm trying to get an idea before I plunge into this. So if I'm supposedly investing some amount and holding a Bitcoin in my own wallet, and I'm exchanging it in any other international wallets, and the wallet itself deducting some TDS, and it is there. Okay, so is that amount, whatever I hold and whatever the money which I exchanged, is like, somehow I bought it for 100 rupees and I sell it for 150 rupees in the exchange, means I need to pay the incremental amount of 50 rupees as a tax, additionally to the TDS, whatever the exchange is costed. Is that I understood correctly?
So again, as I told in the slide, TDS is not an additional tax or a cost to you, right?
Okay.
So TDS is just a deduction from the payment that you get. If you are a seller, if you're
Okay.
supposed to pay 100 rupees, you will get 99 rupees and 1 rupee of TDS, you will get it. But not in the form of money or crypto, right? They will deposit it as a tax in your linked to your PAN. If you go to the 26 years, you can claim it as a credit. So at the end of the year, if you have no liability, then you can claim it as a refund from the income tax department also. That is one aspect. And the incremental part is rightly you have said, correct. So you are supposed to pay the tax liability only on the incremental gain, right? So you bought something, went to some exchange, okay, you sold it, say either crypto to crypto, pay crypto to fiat, doesn't matter. Say you sold it for say 10-20% incremental value. Okay, then on the incremental value, yes, if I just maybe if I give an example, say you bought it for 100 rupees worth of token, you sold it for 120 rupees. While selling this 120 rupees, the exchange has withheld 1 rupee TDS. Okay, you got only 119 rupees. Okay. Now what will happen is, how do you show this is you go to income tax return form. Sale value will be 120 rupees, right? Minus cost of acquisition will be 100 rupees, right? Like what gain you have made? Gain you have made is 20 rupees.
Okay.
So on this 20 rupee, the tax liability will be 30% on that, right? So 20 multiplied by 30% will be 6 rupees. Right? So 6 rupees is your tax liability, but minus 1 rupee, right? Because you have already paid 1 rupee tax already. I mean, you have already paid it. You, in the sense, the buyer has paid it, or the exchange they have paid it in your name, right? So 6 rupees is your tax liability. 1 rupee is something TDS which you have already paid. Okay, not directly but indirectly you have paid. So balance 5 rupees is there. That balance 5 rupees you have to manually pay from your pocket.
Oh, okay. So one more question. So, for example, it's for a future. So if I know a friend who is already doing transactions, and I know him for some time. So this transaction he made in exchange before, is it accountable to tax that, as you were saying, after June or something like that, he need to declare out like that? So is that all the exchanges transaction he made in the exchanges need to be accounted if it is not more than 20 lakhs also?
Sorry, I didn't understand the question. So you said your friend is doing some derivative trades.
Yeah, some kind of currency exchanges, this BTC to exchanges, his own wallet to exchanges, something like that. But all these transaction, whatever the money he transferred into fiat currency from BTC to fiat, so the transfers, the exchange that he has done has to be reported to income tax portal.
Ideally, yes. See, because
In
whenever
the past, I'm saying, not before. It's before June.
June of
Before June, you were said after June only it will be considered, right? So June 2025. If it is in the past, last year or
no.
2020.
See, the term June, what I've said is
Okay.
just to view the 26 years or AS.
Okay.
You need to, before you file the income tax return, okay, you need to log into your income tax portal. Okay, in your income tax portal, you have to go to this AS and 26 AS reporting. Okay, if there is any reportable income which is already highlighted by the department. So because these exchanges, Indian exchange, they will send the data to income tax department that say you have sold X worth of crypto. Okay, now that data will get reflected in the AAS and 26 AS.
Okay.
Now, why I told you after June is because that to make an informed decision to ensure that you file your income tax return properly, after June, you need to go and check your EAS and see what kind of number is being reflected in the EAS.
So
Okay.
I should advise him to check.
Yes, you just need to advise him to, after June, go check in the EAS. See, again, it's a multiple levels. Just checking EAS is also not sufficient. Okay. But if there is some transaction in the EAS and if you're not reporting it, then the risk of a defective notice is 100%. Okay. If there is some transaction in the EAS and if you're not declaring any and the schedule VDA, if you're not declaring any sort of entries, right, then there is a 100% risk that department will send you a notice on this. So that is the reason I told everyone, after June, ensure that you go and check the EAS and see whether any entry is coming. If any entry is coming, that essentially is the sale value of the crypto, right? During entire year, whatever the sale value of the crypto, right, that will get reflected in the EAS. Ensure that entire value is being properly reflected in the scheduled VDA also.
So if it is not there?
So if it is not there, then you need to check. Like, see, yes, it will show transaction only if you have done in Indian recognized crypto exchange only, right? Because if you have done any kind of transaction other than Indian exchange, say directly in your wallets or international exchanges, okay, who don't report to income tax department, right? So then also you are supposed to declare it, okay. But what I'm trying to say is the risk of non-declaration, even when the entry is being reflected in the 26 years EAS, it is 100%. The system will only automatically will reject your ITR form.
Oh, okay.
Even if you have done trades in exchanges and wallets, then in that case also you have to declare it. I'm not saying no. Okay, you have
Even
to.
it is in 2018, 2016, last 2023 or something like that also. Even it very fast, very fast also it has to be done.
No, see, every year you have to do, right? See, if you have done any trade in 21-22, you have to declare in 21-22. If you have done any trade in, right now, we'll be filing for financial year 24-25 after this June, right? We'll be filing income tax return for any transaction that has happened from 1st of April 2024 till 31st of April 31st of March 2025. Okay, in this timeline, if you have done any sale or trade or any airdrop income, freelancing income, any income which you have generated in the current financial year, that's it, right? So then you have to only that one you need to declare it in the ITR which you are supposed to file now.
Okay, so for a future, I understood the question of previous year. So if I gonna invest, I need to keep a track record of where I'm buying or where I no need to declare. At least the transaction history I need to have.
Correct.
And the derivative amount, which is how much incremental I'm getting, I need to make record of it and I need to declare that.
Just to repeat once more, if it's a very few trades, then you can keep it in some Excel or offline, maybe 10-20 trades overall, then you can keep it in some Excel of the record you can do. But if the number of transactions that you have, it is more than 50 or 100, then I will recommend you to maintain some sort of bookkeeping tool. Okay, something like Coinly, CoinExtra, something like that. Okay, there are multiple tools. I will insist that if your portfolio value is slightly on the higher side, okay, I would definitely to ask you to maintain some sort of accounting tool to record all of this, and because Excel can be very messy.
Okay, thank you, Vijay.
All right. I think we're at the end of the session, Ajay. Thank you. It took like half an hour longer than we expected, but yeah, thank you for answering all the questions. Where can people reach you?
I think I would drop my email.
Your email, you're pretty active on your email. Yeah, anyone who wants to get in touch with Ajay, you can email him, and we hope to do more such sessions on Bitcoin, on different topics around Bitcoin. I've added a group link here where we usually have these discussions. Yeah, all of you can join and stay updated.
Thank you, guys.
Yeah, thank you guys. I'll be sending a recording on the group and to everyone who had registered. Yeah, thank you. Bye. Good night.